The webinar is about to begin. Please stand by.
Hello and welcome to today's webinar, Valuation Masterclass, How to Select Peer Companies. To returning attendees, it's wonderful to see familiar names and faces joining us once more. If you're here with us for the very first time, allow me to give a brief introduction. We're the Institute for Mergers, Acquisitions and Alliances, IMAA, the #1 global think tank in mergers and acquisitions, and the leading institution in M&A certification and training, including, of course, aspects of valuation. My name is Dr. Christopher Kummer. I am the founder and CEO of IMAA. It's my pleasure to join you today from Dubai. I will be introducing the webinar for today. Before we dive into the heart of today's topic, I'd like to mention that we'll have a Q&A session at the end of the presentation. Nika Jokic will join later for an outlook on upcoming other events. Nima Nogrekar will be your host for the Q&A. We encourage you to jot down any questions you might have during the webinar so that our experts can address them later on. The chat is available for everyone as well, so please send us your questions via chat or send us a message if you're experiencing any concerns with our streaming. We have the IMAA team and our experts on standby to address any of your questions. Today's webinar is all about valuation and how to select peer companies. Understanding valuation isn't just about numbers, it's about making informed decisions. So why is choosing the right peer so important? Picking the right company to compare yours to gives you a clear picture of where you stand. It's vital to understand how to select peers, which can be supported by the use of digital tools to help with this and avoid common mistakes. These details can greatly affect the accuracy of the valuation. To further shed light on this topic, IMAA has invited experts from Valutico, the world's leading valuation platform. It's my pleasure to welcome Paul Resch, CEO and founder of Valutico. Stemming from his deep M&A background, Paul established Valutico to address valuation inefficiencies, making a top choice for precise valuation results. We've also Greg Brown, director for Valutico in the UK and Ireland. Drawing from significant roles at IBM and Moody's, Greg spearheads system enhancements, elevating clients' valuation experiences. Last but not least, meet Max Leimann, a valuation consultant at Valutico, an M&A and valuation expert. Max leads trainings and serves as the trusted advisor for business seeking rigorous valuations. Without further ado, let us all give a warm virtual applause to Paul, Greg, and Max.
Hi, Chris. Thank you for having us today.
Thanks, Chris. Looking forward to today's session.
What brings you to Dubai?
Well, we have a cooperation here with the Dubai International Financial City, and so we just had signing ceremony. So that's what brought me to Dubai today.
Very good. Congratulations.
Thanks.
I'm dialing in from Korea today. We're on a discovery mission in Korea to see if there are clients for us in Korea.
So it's a very global call then.
Yeah, very, very global indeed. Very good. Shall we kick it off, gentlemen? I think we prepared some slides for today. Excellent. So as we already heard, today we're going to talk a little bit about how to select peers and multiples in the context of M&A valuations. We'll start the topic, or maybe let me first introduce my colleagues here. I'm the guy on the left, as you probably would have guessed. Gentleman in the middle, Greg Brown, one of the longest standing Valutico employees with us almost from the beginning, in charge of Europe sales, but especially the UK and Ireland. And Max Lahmann, working with me in Vienna most of the time when he's not in Taiwan. So also a global traveler and one of our valuation experts. I have the pleasure to give you a quick introduction on Valutico itself before we dive into today's topic. Valutico has been, I would say, born out of frustration with the status quo in valuations. My own background, as Chris pointed out, is in mergers and acquisitions. As a analyst, obviously I built lots of valuation models, and I was always surprised that we still do this kind of thing in spreadsheets. There's no more efficient way to do valuations. So with that in mind, a couple of years ago, we set out to create a better experience, which ultimately became Valutico. That means Valutico is essentially, a sort of integrated solution for everything that is valuation relevant. Think of it as something that can replace your spreadsheets, that can replace your databases, and maybe even half an analyst. That's what Valutico today is. A one-stop shop where we connect you directly to the world's best financial databases, so you don't have to, look for that data yourself. We also automate certain sub-processes in valuations, whether that is, definition of the right peer group, for example, or, cost of capital calculation, forecasting. A lot of these things are being done in an automated way by Valutico in essentially the same way that a good analyst would do that. And then thirdly, the system can also, or our company can also help you with experts like Max, who you can directly interact with on the platform. Whether that's in a situation where you're a solo practitioner and you would like to have a second pair of eyes, review your work, or maybe, your team is on holidays, or maybe, you have just too many projects at any given time, you can outsource entire valuations to us, or you can just also have us review your valuations. Yeah, if we could jump to the next slide. Valutico today is a very global company, even though we're only a bit over 5 years old. We are present in roughly 85 countries around the world, closer to 700 clients actually as of today, and 70 team members also around the world. So while we have product and engineering concentrated in and around Austria, which is where our headquarters is, we really believe in having boots on the ground, having our salespeople, our support people, our valuation experts in the markets where our clients are, so that they can also take care of local jurisdictions, right, and little differences in valuations here and there. And that's also reflected in our revenue share. I don't think we need to go into this in too much detail. Relatively global company. One fact that always amazes me is that we speak 28 languages in the company. I still don't know how we calculate that number. I think that must include local dialects, more like my own Austrian. But a very, very global team, like a global corporation in miniature form and growing very quickly. Yeah, we're very proud that today we work with many of the world's leading networks, both in M&A as well as in tax and audit. We could jump to the next slide. In fact, we work with, on the professional services side, on the tax and audit side, we work with over half of the world's top 20 networks already, and many of the leading M&A networks globally, as well as, several larger institutions, larger banks, for example, that trust us with their valuation needs. With that, maybe just one more topic. I think, there's always one more thing, right? A little announcement for 2023. ESG. For some people, an overhyped topic. For other people, the future. Controversial, to say the least. What we do see in any case, and whether you're in favor or against it, is that it's becoming a requirement, right? Especially on the M&A side, we see more and more players on the private equity side and venture capital side having to focus on ESG, for the simple fact that a company that doesn't look into ESG today will probably not be sellable in 5 years down the road, right? Which is the typical M&A cycle, right, in private markets. So whether you like it or not, you probably have to work with ESG, especially also as an M&A advisor. There is also a lot of value add to be delivered here, and I'm very proud that Valutico, together with the city of Vienna, which kindly sponsored the project with an R&D grant. Together, we built an ESG tool that integrates into valuations. So for us, ESG is not just a binary thing, whether good or bad, but we're actually the first company that built a framework to translate ESG scores into cost of capital adjustments, right? And thus, that's basically the mechanism how it translates into valuations. Have a look at it. It's optional as part of our product. Very well received in the market, and I encourage you to have a look at it. Very, very nice addition to our product line. So without further ado, I've already taken up too much time. This is the agenda for today's session. We're going to have a look at the peer and multiple theory. Max is giving us an insight and some insights into that. And then Greg will show us how this is done on the Valutico platform in a more practical way. We're going to do a little case study, and then eventually we'll have a few minutes to also answer your questions and discuss. Do send your questions also during the presentation, and we'll make sure we'll answer them here on the live chat. Max, over to you, if I may. Oh, we have a poll first. Let me see if that works here on the StreamYard platform. I think you should see a pop-up somewhere. What's the biggest issue you face when choosing peers and multiples? Oh, I see. There is a separate tool for that. Menti.com and the code. I guess we'll give everyone a moment. Or will that banner just stay on? Okay, I guess you'll be able to contribute to that poll during the webinar. Over to you, Max.
Thank you, Paul. I hope you can all hear me well. And while you're logging into the platform, we will already start with the introduction to the peer selection theory, and to note the code 42343816. Make sure you note that and can log into the platform. Well, let's kick it off. When we select a peer group, we have to follow a few considerations to make sure the whole valuation project, and therefore especially the peer analysis, will be accurate and at the end of the day also defendable to your clients, to your partners, etc. So we will give you some tips and tricks from practice, how you can do that at the best to make sure this aligns well with the quality of the project you want to achieve. So first of all, let's start with the industry and the industry sector. When you select the peer, you will obviously start with a huge database. The first step would be narrowing it down by the industry. So the target company, so the company you value, might operate in a specific industry. Might it be software? Might it be machinery? And the first step could be narrowing the pool of the peer group down to the same industry. So you can already start with a pool that shares similar similarities. Next step, and this is where it gets much more accurate, and I would also say this is the most important step when selecting the peers: analyze the business models and the actual operations of the target company, and then choose peers who do very similar in operations. And this reflects the actual relevance of the multiples, because at the end of the day, you want to compare your company with most likely companies in the very same field. Another aspect to cover are size and scale. Size matters when it comes to valuation. A smaller company has typically a discount on their value. So you can also make sure, if you value a smaller cap company, an SME, to go for smaller companies or apply a discount to your multiples. But you also have to make sure to be able to defend such an assumption. Next thing, and this is also very relevant, is the geographic presence. As you can already assume, companies in similar operations could do very, very different in different markets. Let's say a machinery company with exactly the same business in the US and maybe in a developing country could have completely different competition, completely different access to technology, and therefore also completely different profitability margins. So make sure that the companies that you select are from the same market that the target company operates in.
Maybe with one addition here, Max, if I may. I mean, in certain very specialized industries, I'm thinking about very specialized niches of the software market, for example. Sometimes you would want to have a global peer group, right? Simply because you would probably run out of local peers very quickly, right? And you could also argue that increasingly they compete in global markets, right? And with global competitors, right? So that's just maybe something to keep in mind. But it obviously depends on your valuation situation.
Yeah, thanks for that, Paul. Absolutely true. Next point would be the growth stage. So the peers you select could be in different growth stage, and it obviously makes sense to select those who are in a similar growth stage as the target company. If you value a pretty young company with still very high growth rates, you might want to look for similar comparables. if you already value a very stable, mature company, go for companies in the same stage. You can there look at growth rates of sales, capex expenses, etc. There are a few indicators where you can compare these factors, but also detect outliers pretty fast. Then have a look at the financial metrics and health. Obviously, revenue, profitability, etc., also debt level and cash flow are things you want to have a look at. They should not completely be different. That could be an indicator that the business model or the operations are not that similar as you thought at the first glance. So you can also have a look at that. Having also a look at the competition, ask yourself, how does the target company perform against its direct competitors? Do a analysis of the market, of the specific operational activities, and find companies that act as close as possible to the target company. And last but not least, you all know that valuation is a very individual topic. Have a look at unique metrics. Some companies have something very unique, as Paul mentioned, software, but then maybe software in a very specific field. You might want to go for these very unique characteristics. You can use tools to search your databases for specific keywords and therefore bring in these unique metrics. Good. After having selected your peers, you will have a list of the multiples. So every peer should bring, based on the data that is underlying the relevant multiples. We will have a look later of what kind of multiples we can see there, but it's also essential to analyze these multiples again. Even though you have considered all the points mentioned, there could be outliers in the multiples, so also have another look. Started off with the nature of the actual business. You can consider the unique characteristics of the target company to determine the right multiples. So as we will also see a slide later, not all multiples make sense for all companies to value. Although you can calculate them, sometimes it might be more sensible on the individual case to include some, to exclude some others. That's something you can consider. Then the comparable metrics, and the chosen multiples should be easily comparable across companies. That makes sense. A similar company to our target company should also have similar multiples. There shouldn't be that big outliers. Sometimes you have an outlier but can defend it. Then this is up to an individual approach. In other cases, you might find this as an easy approach to actually detect outliers and maybe correct your valuation. Market efficiency, where you can select the multiples that are widely used and understood to enhance the reliability. Well, obviously, selecting those makes sense. You want to have a reliable company that reflects the actual market. Next point, the data availability can sometimes a bit tricky. You would have to have the access to relevant databases. Some provide more data, some provide less data. And if you do not have data, it can be a bit difficult to make assumptions there. You can still use companies that lack of data just to show that you thought of them. But I would say the more niche you go, the more difficult it will get. But also with the right databases, you shouldn't struggle too much with that problem. Another relevant aspect is the purpose of the valuation. As discussed before, evaluation could have different purposes, and therefore also the multiples you select should meet the actual purpose. So you can ask yourself, is this for a potential sale, a merger, an investment, etc.? And therefore select the right metrics. Have a look at the historical context. Look at the historical trends of chosen multiples for both the target company and the peers. You can maybe detect a trend line. You can also see a change in business operations, which could falsify the multiples, the historical multiples at least. Always makes sense to also consider this. Yeah, almost at the end, we'll have a look at the interpretability. So choose multiples that are easy, interpretable, and make it intuitive sensible to actually understand the result. It doesn't make sense if it gets too complicated, because the metric at all is pretty simple to follow. If it gets too complicated, yes, you might question that. Maybe sometimes the easier way is the best way. And last but not least, you are the valuation expert. So rely on your own judgment, rely on what you've seen in the past. You might have had similar cases, and this is also a huge thing. Again, valuation is a very individual topic. So sometimes you have to make it make sense with your own understanding of the industry, of valuations themselves. Well, now as promised, let's have a look at the most popular multiples. I mean, if you look at the data that a company provides, you can basically make a multiple out of any metric. But in practice, there are a few that are more commonly used than others. And I would say the most commonly used one we see here. We started with the enterprise value to sales, the EV sales multiples, which indicates how highly the market values every dollar of the company's sales. We have the enterprise value to EBITDA, the EV/EBITDA, which provides the insights into how much buyers would be willing to pay for a company's operating performance. We also have the EV/EBIT, so after the depreciation and amortization, which then actually compares the multiple of the operational profit and provides insight into how much buyers would be willing to pay for a company's operating performance. Almost at the end, we have the PE multiple, the price to earnings ratio, and that reflects how much the buyers were willing to pay for each dollar of earnings in a transaction. And last but not least, the PB ratio, the price to book, indicates how much buyers were willing to pay above the net assets actually taken from the balance sheet value in a transaction. These five are the most common ones for the multiple analysis for peers, but you can also use exactly the same multiples for transaction analysis. So that are usually the same. If you find a transaction, you can use exactly the same. They explain also the same way. So that's a way to cover both methods, so to say.
Maybe one thought on this. I mean, obviously the availability of EV sales multiple is much higher, right, when it comes to transaction multiples, right? Because it's easier for the various databases to find a sales number, right, that they can, sort of relate a transaction value to, but it's much harder to find, let's say, a net income number or an EBITDA number, right? So you probably have a lot more data available for EV sales multiples.
Thanks for that. Now we will have a look at common mistakes and pitfalls when choosing the comparable companies. So we've learned now how to choose the peers, how to interpret the multiples, and what multiples there actually are. But in practice, there are a lot of things that are commonly done wrong. So we want to provide you with the knowledge to avoid the most common mistakes. First of all, you want to avoid superficial similarity. So selecting peers only on industry classification without considering the business model, geography, etc., does not really make sense. Coming back to Paul's example of the individuality of software. Just imagine you just use software as a general industry selection and then basically pick random software companies. Obviously, the target company also doing software would probably operate in such an individual field. Take Valutico as an example, as a SaaS business in the world of business valuations. You cannot compare it with completely random software companies such as SAP, etc. Make sure you do the homework, go into the details. Also, overlooking business model differences. As I just mentioned, go into the details, analyze the business models, but also revenue sources, risk profiles, etc. The more you do here, the better. Also, at the end of the day, you will be able to answer very detailed questions from your recipient of the valuation. Try to avoid poor data quality. As Paul mentioned, some data is better available than others. Be aware of outdated or inaccurate data. Sometimes, as I mentioned before, oversee a change of business model which falsifies an historical multiple that made it into your valuation should be also avoided. The bias of selecting peers that favor your valuation is one of the most common mistakes. Obviously, people tend to pick those who confirm the value they want to achieve. That happens a lot of times. If you are on the sell side, you probably want to have a different result than on the other side of the table. That should be avoided. Peers should be selected from a neutral perspective to ensure that the quality of the valuation is also given. Well, the geographical differences, we discussed them before, they should not be ignored in most of the cases. Markets could differentiate a lot. On the other hand, when you have a very globally operating company, as we discussed, this could also be to a certain degree neglected, but make sure you put some thoughts into this. Don't ignore it. Then, using too many peers. Quality over quantity is essential. You better want to have 3, 4, 5 very good, very accurate peers that reflect revenue structure, business model, geography, etc., than a broad list of 25 peers that is more generalized. Because at the end of the day, you want to have the multiples from the accurate company or companies and compare it with your target company and not a market overview that is very generalized. Last but not least, that sometimes goes hand in hand with selection bias, the lack of judgment. Obviously, you're the expert, you have professional judgment, but make sure to stay neutral, make sure to question sometimes your own knowledge. If you're need support, you can also discuss the topic with other people. Just make sure that the expertise you bring to the table actually contributes the highest value of the valuation, because at the end of the day, this will be one of the biggest impact of the final result. Well, and with that said, we will already come to the practical part where Greg will take it over and jumps into the valuation of actual company.
Thank you very much, Max and Paul. Some very, very good insights into the theory. And now we shall put us into practice. Hopefully everybody can see my screen. So for the next part of the presentation, I'll be introducing you to the Valutico business valuation system. First and foremost, it's a cloud-based solution, plug and play, very easy to use, although we will provide full training and onboarding for you. When you log on, you're presented with a series of modules. We can obviously value private companies, listed companies. We even have a resources center, which is a great place to come to for some useful valuation metric parameters. So what we've done at Valutico is we've built out a long, extensive list of industry sectors, fairly broad by definition, but most types of entity you'll be valuing would fall in one of these category titles. And this number denotes the number of companies we have in the system. And across the top, you've got the key metrics, the key multiples. Okay. Hands in hand with that, we have a transactions tab. So similar rules, again, all of these industry sectors, but this time how many deals we have in the system. This is the classic what's in the box, high level overview. Once we go into the main system, we can take a more granular look at each and every peer and transaction. So let's begin the valuation. The platform just requires some basic user inputs. The first thing we need to do is enter a company. I'm going to value a company in my home markets, of course, the UK. I'm London based. However, as you appreciate, the platform is very much global. Next up, we need to choose an industry sector. So we're choosing techie. Let's go for IT services. Now, the next field is very interesting. Even though we're valuing a private company, one thing we'd encourage you to do is to add a listed peer. Why? We're obviously educating the platform about the product service line, the operating model, and this will also help with the formulation of the list of peers a little bit later on. So if you've got one, so if you're valuing an online shopping business, an auction house, you may select eBay. Okay, so that be very useful. If not, don't worry, you can leave that blank. Next up for us, you would choose the valuation date. Today's date is the actual default. However, on occasion, some of you may require to do a backdated evaluation, so you can go back in time to certain time points. And the best way to kind of visualize this is like jumping in a time machine. You go back to a specific date, and it says the peers, the multiples and transactions were for that date. But for today's session, I'm just going to include the present day. 2 more fields to complete. We'll actually ask you to fill in the last actual year-end date. So I'm going to use calendar year-end 2022. And last but not least, you'll put in the annual revenue figure. Of course, you can choose a different type of currency depending on the given situation. For the UK, I'll include 4 million sterling. So that's all we need, and away we go. And any questions, please do submit them. Paul and Max will keep an eye on the questions and will answer as we go along. So the first stage in the process for us is called the qualitative risk assessment. Okay. On the left-hand side of the screen, you can see exactly where we are in the process. So this particular section is specifically built for SME valuations because it corrects the shortcomings of CAPM. I'm sure many of you are doing something quite similar already. It's a bit of a scoping exercise. You're uncovering some soft facts. So largely we can work out our cost of equity premium and our discount to the trader multiples. So you'll be going down the channels. You'll be working out company size, positioning, market share, competition. As you can clearly see, everything is average and equal when the screen loads. So obviously it requires some human interaction, some human perspective. So let's talk about management quality. Often a good discussion point. Let's say there's a supreme leader, founder, CEO at the helm. I'll move this to the highest tier. Everybody just keeps their eye at the bottom. It's a 5-point tier. And as you can see, the risk, the premium, the discount, they'll decrease. So nice and easy, just drilling down into the micro and macro components of the business. Questions that often arise when I do these demos, I think everybody understands what we're attempting to achieve. Is what's big, what's small. This is largely a subjective exercise. So just to give you our perspective, you can tackle this twofold. Firstly, you can say small would be a classic SME, 1 or 2 mil business, startup, young growth firm. Big, quite simply, would be the biggest of the best when it comes to private companies. Another approach, certainly non-numerical, might be the company you're looking at. How does it sit within its respective market space? Is it larger than the average company? Is it smaller? If you're still unsure, we advise you to leave it as it is. On the right-hand side, we've got the weighting system. So this just gives you a little bit more flexibility. You can change the importance, the order of magnitude per category title. As long as it stacks up to 100%, you're good to go. At the bottom of the section, we appreciate and we've realized that a lot of practitioners have got strong thoughts and sentiments about the premium and the liquidity discount. You can change these. So that's the qualitative assessment. Something Paul touched on earlier is our ESG module. So this is our latest addition to the Valuatico platform. So what is this? I won't spend too much time on this section, but in short, we've devised a questionnaire, 29 questions that either you would be answering on behalf of the business owner, or in some instances, you may send this off to the business owner to complete directly. And every time a question is answered, an ESG score is produced, and that will have an impact on the cost of capital allocation and the discount rate. So very similar to the qualitative assessment, this stage is optional. We wouldn't necessarily expect you to use this for each and every valuation. However, if you're valuing maybe a manufacturing company, natural resources, logistical company, somewhere where sustainability does play a large part in company activities, it may be worth introducing this stage. Back to the mainstream, probably the most relevant stage for this particular presentation is our peer selection. So one of the things our clients say to us that they kind of struggle with the most, or is the most time-consuming element, is actually finding the right peers. The Valuatico platform will pre-select a list of peers. We will give you 15 or 20 peers. And then obviously we would expect you to review, refine the list, use your professional judgment. So here we're giving you a good 15 matches. Any peers which you don't like, you can obviously remove from the equation. So what we're really aiming for is a much better finite list of probably 6 or 7 peers rather than 15 or 20, which are a little bit hit and miss. Of course, many of these peers you'll already recognize, but if you don't, you can obviously hover over and we give you a complete overview of that particular company. Just as you can remove a peer, naturally you can add additional peers, so you can have a look further into the system and see what else is generated. So do a quick search. We found another 28 additional peers, and if any of these you wish to include, you would hit the plus sign. One of the most powerful features in the peer selection stage is the full text search. The way I largely use the platform, rather than starting with an industry sector, I hit a product or service line. That's a much more efficient way of finding exactly what you're looking for. In terms of the searching, of course, you can start with your domestic country, of course, like I am with the UK. But further to that, you can choose a cluster of countries. You can choose Western Europe, the whole of Europe, or the globe. Go back to the main section across the top. Hopefully these need no introduction to you. You have the different valuation methodologies, EV sales, EBITDA, EBIT, price earnings. We've also got the financing structure, the debt-to ratio, the credit spread, the R2 squared, along with the levered beta. Everything is customizable in a section. So some of these columns, data points may not necessarily interest you. So you can simply unclick them for a more simplistic model. At the bottom for each column, we've got the median of the values above, and here's the discount rate, which I previously mentioned we can change. Lots of tabs at the top to help you along. So here we have a benchmarking tab, so you can compare, contrast sales growth and average EBITDA margin. And then also you can take a more granular look at each and every peer. So you can take a look at the profile of the business. In case you're wondering, we offer 53,000 global peers. All of them come with a description, product service line, the fundamentals, and also a click through to the website directly. Next up, we show you the financials. If anybody is obviously wondering where exactly do we get this fantastic data from, so we're in a long-term partnership with a major leading global market data provider called S&P Capital IQ. S&P, of course, stands for Standard & Poor's. What does this mean? You have the nice aspect, the big draw, is that we have Capital IQ's valuation data incorporated into our system, and this is updated on a continuous basis. So this is live time. So here we show you the income statement, capitalization, the valuation multiples, the balance sheet, the capital structure, debt, credit spread, and the beta. Then last but not least, we've got the peer section, which again, the platform does one more cursory sweep just to ensure we haven't missed anything. And then of course here, we start seeing some international options. If any of these appeal, you would add the plus sign and they would get added to the equation. Last but not least, we show you the beta, which gives you the last 5 years worth of share return and index return. So that's the peer section. Once we've concluded the peer section, we're happy with the peers that we've generated. We would move on to the business plan. It's all about the numbers. Important to have an appreciation for how the company has been trading historically and future anticipated growth. When this screen loads, very broadly are presented with two options. The first option, I'd always encourage my clients strongly to go for. That's always use your own financial models. You obviously have built them up successfully over the years. You trust the numbers. You've possibly obtained the projected numbers from your own client. That's definitely the way to go. However, we do have one more option, which may be worth of consideration. That's Valutico's industry estimates. So when would you use this? You would use this perhaps if you didn't have the luxury of having access to market data. Your own client perhaps hasn't been forthcoming with the numbers and you need something to work with. You operate in a new industry sector, or perhaps quite simply, you just want an independent account. I will show you both options. So in terms of the color coding, anything in blue is a manual input. So that's our 4 million that we entered in the first section, or it can possibly be an upload as well. Anything in green, these are the consensus analyst forecasts. So where exactly do we get these numbers from? They're derived from the previous peer section. I'm sure many of you are aware all of those listed peers are closely tracked and followed by the leading investment institutes for their growth expectations, and we feed that into the system. However, as you can see now, we can override these. So every step of the way, it's review, challenge, tweak accordingly. On the forecasting front, we're going out to 2029. I know many of you probably do slightly shorter forecasted periods. Most of my clients certainly typically forecast 3 years out. Some may also forecast 5 years out. Historically, you can upload 5 years worth of numbers. In terms of how you would get your numbers into the system, so quite simply via Excel or CSV. You've got a very standard business plan, nothing particularly special about it. So the key question for us, how do we extract the core numbers, the most important numbers for this valuation from this sheet? The answer is a lot easier than you would expect. Bottom left-hand side, we have an export tab, and it's as easy as this. We have our financials on the left, and if you look closely, they very much mirror what we see on the platform. Across the top, of course, we've got the years, and these are the numbers that have been extrapolated from the business plan. And quite simply, we go back, and at the top right, you'll spot like a little cloud with an arrow. You can drag and drop your model, of course, or you can go old school and traditionally select the file from your folder, and then your numbers will replace numbers in the background. Also, I know many of you never submit just the end valuation outcome. You're probably doing a bit of modeling using various types of scenarios. So here, of course, gives you the opportunity to upload more aggressive numbers, more conservative numbers, or something in the middle, which of course helps you produce that final base case, top case, or worst case analogy. Go back to the main section. We have a few more tabs which we think would prove useful to you. Here we have a validation tab. The best way to describe this is a bit of a plausibility check, just to make sure the business plan is internally consistent. So you can see the growth rates, our margins, investments including reinvestment rates. We have a value drive analysis which focuses on assets and return on cap employed. Benchmarking, hugely crucial to the equation. Again, another opportunity to compare, contrast sales growth, EBITDA, EBIT, net income, capex, and other. And other is showing you receivables, inventories, accounts payable, cash investment, debt relative to EBITDA, return on equity, and asset turnover. Then last but not least, we have our net debt bridge position. So here, of course, you'll pop in the firm's debt, pensions, cash considerations. And of course, you'd be very welcome to add your own custom net debt line item, give it a name and also a value. So that's pretty much our business plan. Next up, we're getting towards the business end of play here. We have our transaction selection. So interestingly, this is where we house our private company data. You'll see a list of deals by date, by acquirer, targeted business, the standard stuff, which of course we already know about, stake acquired, deal value, and the corresponding multiples. Again, very similar rules of engagement to the peer section. You can obviously remove any transactions which you don't like, but also you have the added advantage of adding your own transactions. Okay, so I'm sure many of you already maybe have access to market data. You have a subscription service, you like that service, it produces good data, so you're obviously very welcome to incorporate your data within Valuatico's platform. This is the important part. If you do choose to upload a peer, a transaction, or a financial statement, just for your peace of mind, that information would stay strictly within your version of the platform. Nobody externally, no other clients will get to see the data. As you'd expect, we've got a very strong filter which will help you really drill down and find exactly what you're looking for from a transactional perspective. So you can do a search by industry or industries. I think I've covered, you can do a search by country, region, continent, or the world. We can also drill down by date, deal value, stake acquired, bidding company, target company, and a full text search. In case you're wondering, we're very close to 1 million transactions on our platform, so plenty of data to do your valuation. Just finally, as you would expect, you can hover over some of these transactions and get a bit more of a perspective. There's like an exec summary, a bit of a who's who, what went on in the transaction. And then also there's some very powerful features whereby you can do a search by same buyer to spot some similar transactions. And there's even a search by show similar transactions, which produces transactions based on keyword and transaction description. All of our private companies also have profile write-ups as well. So I think we're pretty much done on the transaction selection. So we've actually concluded the valuation. Now this is the end game. This is the stage where it really all comes together. We present our results in a football pitch style presentation. Obviously, we're showing off today. We're showing you every single valuation method possible. Naturally, we wouldn't expect you to use all of these in one time. Most of you are probably using your standard staple 2 or 3 methods at once. In case of what you're seeing, obviously we called this one test company. Here we've got entity value or enterprise value. Some of you may be inclined to be more interested in the equity value, so I'm just flicking the switch. In terms of what we're seeing here, the green dot represents the value of our business based on a specific methodology. The darker blue range is the range of the peers, so you can see where this value sits within the peer group, and the lighter blue range is the average of all of these methods. So this time we've obviously done this particularly speedily for the purpose of this demonstration, but we're valuing this business between 4.7 and 7.8 million. 2 things obviously to take into account. I've kind of zipped through all of these stages this morning. I'm sure all of you are consummate professionals. You need to spend the appropriate time and attention in each section, the classic quality in, quality out, to ensure you do a good job with the qualitative assessment, the peer selection, and always ensure you upload your own numbers. And then nobody would actually use all of these at once, of course, so you have the ability to close or hide the methods that don't interest you. Also included is a useful VC method, which is particularly effective for loss-making businesses and startups that you can utilize. After the valuation main summarization page, we show you the net debt bridge position. We show you the discount rates. Green is showing you cost of equity, blue cost of debt. Here in the middle, we have our cost of equity premium. You're the masters of your own ship here, so you can interchange between the different business plans. You can override the valuation range, of course, and then anything you see on the right-hand side, you can adjust. This is not a black box. Everything comes fully documented, fully source referenced, so we give you an accurate description in terms of where we source the data from and what we mean by that. And also we have a deep dive technical manual if you want to get your head under the bonnet and see all of the workings. And of course, if you change any of these parameters, the valuation will get updated as a result. After that, we then go into a lot more granular detail for each valuation methodology, including showing you the sensitivities, the WACC, the perpetual growth rate. As you can see, a very professional grade presentation is produced in a matter of minutes, when usually, even if you've got a good maybe associate or analyst or junior compiling a report such as this may take them a good few days. So pretty comprehensive. Just to finish off here, obviously showing you the leverage buyout, the financial mix, the cash flows, the credit metrics, and the exit calculations. Once we're happy with the valuation, obviously, what do we do next? You may choose to share this valuation with one of your colleagues, so we provide lots of collaboration tools. A hyperlink is generated. You would, of course, send that to your colleague. They would paste down their browser. They take over the valuation. It's like a live working document. All of the valuations will be saved on our system by creation date, when it was last updated, and the actual valuation date. In terms of true export capabilities, we can export in Word and PowerPoint, and you'd be very pleased to know we service multiple languages here, so German, Spanish, French, Italian, Portuguese, Polish, and Dutch. In terms of how the end report would look like, so this is our PowerPoint house deck. Of course, if you join us, there's lots of scope for customization, white labeling. You, of course, will be able to have the ability to upload your logo. You can change the color scheme so it matches your corporate insignia, and a very professional grade PowerPoint with an explanation. But obviously, you can edit this and add your own narrative. You can remove slides, add slides, and then, of course, we give you the source reference points. What a lot of our clients typically tend to do when they join, most of you, I'm sure, will already have a template of your own that you're happy with. It's been approved, so let's not reinvent the wheel. With Valutico, you have the ability to continue using your existing template. And quite simply, the way this would work, you you would upload your template to our system, and then here you have a choice of all of the data segments and points you've seen today. And this is a la carte. You can quite simply create your own valuation report by using these placeholders. You would paste these onto page 4 of your template, for instance, and that would instruct the platform where to drop or dump the data. So definitely, most definitely, a time investment just to go down the channels, copy and pasting what interests you most. But the good news is, once you finish this exercise, you only do this once. You would name it and save it, and then you would have your own templates in perpetuity. Okay, so arguably you can have your long form, short form, client ready templates. That is pretty much it. Back to Paul.
Greg, thank you very much. We'll have time for some more questions. Apologies, I tried to answer them in the chat, couldn't connect YouTube, so we thought we'll just answer them one by one verbally. First question comes from user or listener Angel Papa. Where do the peer and transaction data come from? Oh, very good. Here's the question. So let me start with peer data. The main data source for any peer data is Capital IQ from Standard & Poor's. I'm sure many of you in the M&A world are familiar with it. In our opinion, the world's best financial database when it comes to fundamental data, and things such as and also index data, for example, which we use to calculate beta factors, for example. We connect this to a range of other databases and data sources we collect ourselves. One of them is trading economics, for example, where we get bond data from, rating information, other sovereign data that we use, risk-free rates and so on, tax rates. So that's the peer data. And when it comes to transaction data, we actually aggregate several different data sets. We also have transaction data from Capital IQ. In addition to that, we use Bowhurst, which the users in the UK might be familiar with. Very exciting company that uses AI to extract transaction multiples. And then we are integrating right now, and that's in testing right now, a database called EMIS, run by ISI Emerging Markets, which is quite interesting for us because it fills some white spots on the map. They're focused on transaction data for emerging markets. And with EMIS, we now have over 1 million transactions in the system. Yeah, and we have, I'd say, half a dozen additional transaction databases where we're in active conversations right now about onboarding them. We just built the technical infrastructure to sort of ingest different data sources on the transaction side. And our strategy is really one where we want to aggregate as many different data sets as possible and also generate data ourselves. Right? So as a user, you can also provide and upload transaction data into Valutico. We will obviously, we're not interested in individual transactions, right? And, it's none of our business. But what we want to do is we want to aggregate high level on industry level, right? And provide insights based on high level industries and countries, right? So thank you for that question. Next question, what if there is a future valuation date due to targets vetted forecast revenue? For example, when the deal will close the following year, is some so? That's an excellent question. I've never actually tried to do that. I suspect it doesn't work in Valutica. You probably can't put in a future valuation date, although it's something we could actually add to the product roadmap. I don't see why it wouldn't work. We would just use any assumptions that we're using today. Good one. I'll look into that. Is some factor or rates applied for following year? Can't really answer that. That's a bit out of context now. So maybe let's jump to the next one. Nika Maxine Zamora is asking, what valuation methods are available? Greg gave us an excellent overview. We have various different income-based approaches, DCF-based approaches, ranging from simplified DCF WACC, APV, flow to equity, period-specific DCF with people with period-specific cost of capital calculation, capitalized earnings, dividend discount model, you name it. That's on the income-based approach side. When it comes to market-based approaches, we have various different trading comps, multiples, right? EV sales, EV EBITDA, EV EBIT, price earnings, and price to book. And when it comes to transaction comps, we have EV sales, EV EBITDA, EV EBIT, and price earnings. And then recently we also added the venture capital method, which you could argue is a sort of an income-based approach, or not a valuation method as such, but that's debatable. And then finally also we have a leveraged buyout, an LBO model, the world's simplest LBO model, but surprisingly accurate, and it can give you very good indications for when you're in the process with financial sponsors. Piers asking how frequently is the data updated? Generally, well, not just generally, the data is updated on a day-to-day basis. That's anything that's connected to public company data, share prices, forecasts, beta factors. All of that is updated daily. Most transaction data is updated daily. Some providers updates monthly or quarterly, but I'd say probably 90% of all the data is updated daily. Also, all economic data is updated daily. Great question from AJ. How do you anticipate advancements in data analytics or AI impacting the process of selecting and comparing peer companies for valuation? How much time do we have to answer that question? That's something we spend a lot of time working on. We just signed a partnership with 2 leading professors here in Europe that research at the intersection of valuation and finance. They are specifically working on peer group selection based on AI and also transactions. And so we've just launched that partnership. We've just made an excellent hire. Somebody joining us, data scientist, PhD astrophysics, who and many other titles. Very, very smart guy who we're working with together to develop recommender systems based on essentially natural language understanding. So where we're actively analyzing company descriptions of the company you're valuing, and then making recommendations based on more natural language understanding based approaches, right? Less statistical methods, less multi-factor models that we currently employ. So super exciting field, even beyond just peer groups and the right transactions. There are very exciting things happening when it comes to, I wouldn't say valuation, but pricing. Problem is many of these models are sort of black boxes, but do expect more here, especially also when it comes to intangible valuation, by the way. So some very, very exciting stuff happening. I'm very proud to say we're really at the forefront of that development. Jiang is asking, and I'm sure I'm butchering the name, apologies, can you give me the activation code so that I could access the website? Guys, I'm not sure, are we sharing that? Best to just get in touch with us and we'll share it with you via email or just on the website, right? There is a chat interface. Jyoti Toro is asking, is AI used in M&A due diligence stage today? If yes, is this embedded into Valutico? Another fantastic question. So we don't typically, I mean, we're not a due diligence company. We focus on valuation. Obviously, there are links, right, between these topics. I can share some insights here because I have lots of conversations. When you talk to people who do due diligence today, not many people expect to be humans to be involved in a significant way in 10 years, right, in due diligence. Modern transformer-based AI models, ChatGPT and other large language models are excellent at reading and analyzing large amounts of data, in the context of things. And from what I hear, a lot of people are working on automating things such as, red flag reports, due diligence reports, not just financial due diligence, but especially also legal due diligence and other aspects of due diligence work. We, as a valuation company, we're not directly involved in it, but we're sort of on the sidelines following the developments here very closely. So thanks for that excellent question, Jyoti. Paul is asking, how useful is your solution for smaller, lower mid-market transactions? What is the smallest size transaction you typically capture? We specifically built it for mid-market transactions. If you work in large cap M&A, people would probably expect you to build, models from the ground up, right? So we love mid-market advisors, small cap advisors, because that's what we built the platform for. The typical valuation on the platform, by the way, is somewhere between 3 and I think 20 million, right? So it's not just the biggest deals that get analyzed on our platform. So I would say it's very, very useful. Obviously, we're doing more and more to make it even more useful. I mentioned we're aggregating more and more data sets, transaction data sets. We are, for example, building a very nice model now for levels of value, especially relevant for smaller companies. Discount for lack of marketability, discount for lack of liquidity, control premium, where we're sort of getting started, but we're adding more and more quantitative models behind these concepts. Another interesting thing in that regard is that we're also building a benchmarking system that not just benchmarks against public companies, what Greg showed us, right, where we use consensus forecasts from analysts, but where we also build what we call swarm intelligence-based approaches, which essentially means we want to build consensus around growth rates, margins, evolutions, and so on, based on the user base. Right? So the more people use it, the more people feed our internal consensus database, which obviously then especially uses also small company data. So that's just another example, and we have a few more things in the pipeline that my product team would not be happy about if I already shared it. But we have some really, really interesting ideas there. So thanks for the question, Paul. Jyoti, doctoral researcher in the field, please do get in touch. You can find me on LinkedIn. We would be very, very interested to have a conversation with you. Yeah, another question. Do you anticipate adding a quality of earnings discount factor in the event your target has unique data to discount, or should that be tweaked before uploading? Similar question with comparables if they have unique large accounting transactions that are one-time and distort historical metrics. Yeah, tricky topic, very tricky topic. I mean, we do expect you to already to adjust your, or to normalize the financials you upload to the system, right? That is not something we can do in an automated way anytime soon. Maybe, going back to the due diligence topic we had earlier, at some point, maybe somebody solves that topic. But for now, that is unfortunately something you have to do as, as the person preparing those financial forecasts, right? And we all know, especially those working with small cap and mid cap companies, that's often challenging, right? By the way, we just did a webinar just on that topic last week. So it definitely should be tweaked before uploading. Oh, and I see we're probably running out of time, Nima.
Thank you very much, gentlemen, for that insightful presentation. I would like to personally thank each one of you. I really liked Paul's comment on the ESG and the reminder you made. Max, with the level of details you went into, and the comment on looking at unique metrics. And of course, Greg, it was a nice touch, the comment on being in a time machine, and of course, that user-friendly experience that you portrayed for all of us. So thank you very much. If you would like to look at the results of the poll that you announced in the beginning.
Yeah, very interesting. I don't think we need to dedicate too much time on this. I think it's not surprising given the topic of today's session.
Wonderful. I will then hand over to my colleague, Ms. Nicole Jokic, who is the Director of Business Development of North America.
Hi, thank you, Nima, and thank you so much, Paul and team. It was a great, insightful presentation. So we're really excited to be offering some additional training opportunities and webinar opportunities as well. We have a valuation training coming up with Professor Aswath Damodaran. That's going to be taking place from the 6th to the 9th November virtually. So if you are interested in this topic, Professor Damodaran is obviously one of the leading thought leaders in this topic area. In addition, we also have some M&A certification programs coming up. We have an on-site training in Amsterdam taking place from the 2nd to the 6th of October. We're going to be offering our International Mergers and Acquisitions Expert Program, along with our Certified Post-Merger Integration Program. If you're not able to make it to Amsterdam, we will also be offering this again in New York City. This is going to be taking place from the 23rd to the 27th of October. And if you're not able to to attend in person on site, we are also going to be offering these programs virtually live. These are going to be taking place from the 13th to the 24th of November. And in addition, if you're unable to attend any of the in-person trainings or virtual trainings this year, you can always access our programs via online self-study at any point. In addition, we also have some upcoming free webinars like we did today. The next webinar we're going to be hosting is going to be starting on October 11th. It's going to be on AI and M&A, particularly during the post-merger acquisition. And we're really excited to be welcoming experts from Mercer on this topic. In addition, we're also going to be offering another webinar with experts from Valutico on how to value an SME, on essential factors and proven practices. If you do have any questions on our upcoming trainings or certification programs, please feel free to visit our website. You can reach us at www.imaa.org or send us an email at info@imaa.org. Thank you so much, everyone, and I will go ahead and hand back over to Nima for closing remarks.
Thank you very much, Nicole, for all those opportunities. This is all the time we have for now. I want to thank Paul, Greg, and Max one more time. To our attendees, we appreciate your participation and hope you found the session beneficial. We look forward to seeing you in our next webinar. If you like a copy of the presentation, please send us an email and we'd be happy to share it with you. Thank you.